All right, everyone, buckle up because we are again diving into this week's Property Pulse with none other than Dr. Andrew Wilson. Whether you are wondering where to buy next or just hoping the media will stop gaslighting you, this episode is packed with gold. Approvals are shifting, auctions are heating, and the opportunities are starting to sparkle like a freshly staged open home. Welcome back, Doc. How are you?
Well, that's extremely poetic of you, Rachel. I'm extremely impressed with the wonderful opening there. And yeah, I love the sense of this is the pulse, and it is the pulse, and it's loud and strong at the moment. So we have another wonderful week of property ahead of us. What's happened this week? Economic data more than anything else. Of course, we are in the middle of the month, right? Actually, in the middle of the month today, Rachel, which means
we're in the middle. Right in the middle.
Which means we're in the middle of winter. So from this day forward, we're heading really towards spring because we've marked the halfway mark of winter. So, and I'm actually just detecting the days are getting a bit longer too. So, hopefully we can shake off the cold weather soon, but that's okay because let me tell you, Rachel, there's nothing cold about the housing market at the moment. Still
not at all.
Dare I say, red hot in relative terms. Of course, it is still with the winter market. A lot of people out there are enjoying holidays. Good luck to them. School holidays, I think, in just about every state at the moment. And a lot of people do take leave at the middle of the year, particularly to shake off the cold and the gloom. But nothing cold or gloomy about our housing market. So let's get on with it. My housing market, of course, is my particular brand. I act as a consultant and a commentator and a data provider for the housing market. We're all about the current state and future prospects of housing markets, particularly the current state. And that's why we bring you all the latest information and data and opinions every week on our podcast, along with the good folks at Infinity. We've been doing this for a number of years now. And we are all about let's make the best decisions we can in property. And the best decisions are all about having the right information and the right evidence to base our decisions on. And that's what we do here, Rachel. So let's get started. It is the week ending Wednesday, July 16th, 2025. As I said, right in the middle of July, which means we are right in the middle of winter. And from now on, well, technically anyway, we are heading into warmer weather and brighter days going forward. So this week we're going to look at the latest building approvals. Building approval data comes out monthly from the ABS. We look at that every month. It does tend to bounce around a little bit. So we need to look at the trends to get a sense of what the underlying nature of home building is in the country. Now, we know, and we say every month, that Australia faces a particular problem, and that is we haven't built enough houses to match demand really over the last decade. We're not alone here. Most other advanced economies have that very same problem, that we're not building enough. And of course, that means that it puts onwards and upwards pressure on prices and rents. So we'll look at the latest data, but importantly, we'll just see how the trends are panning out. And there's some interesting insights in relation to that. We'll also look at the latest ABS retail sales data. Now, retail sales is important, Rachel, because there's a lot of chat about how consumers are feeling, what's happening with consumption, what we're spending on. And that's an important, obviously, economic indicator. Is consumption is how consumers are behaving. Now, we have sort of hard evidence, which is the actual sales. Retail sales is a very good indicator, obviously, of consumer sentiment. And then we have a lot of consumer sentiment surveys that come around. The unfortunate thing about surveys generally, and particularly consumer sentiment surveys, is they don't, or haven't for some time, reflected what's happening with the hard data. So the soft data, the survey data, hasn't tended to match what the hard data is telling us. And that's why we're certainly more interested in that hard data, because we can see the differential between what these surveys are telling us. So that's why we look at the retail sales. Just a little note, Rachel, in regard to this retail sales data, which is a little sad because the ABS are actually going to stop publishing it. the June data will, which is actually really disappointing for the reasons I just said, because it is a very good indicator of how people are thinking about, their lives, the economy, is how they're spending. And we're not going to have that hard data anymore to rely upon from the ABS, because they've decided to actually stop the series altogether in June. So that's, as I said, disappointing, because it is a good supporter of of economic performance, those retail sales data. So okay, we can take it for what it is for the next 2 months. And as usual, the latest weekly auction results, and look, they are just becoming, quite spectacular, Rachel. We are in the middle of the year. It is the quietest part of the year for property. Typically, markets are distracted through holidays, but markets now are starting to rev up towards the spring selling season. People start to think about, hey, let's get that property bought and sold before the end of the year, so the focus changes. But so typically this is a quieter time of the year, but gee whiz, even though we're seeing, as usual, fewer listings coming through, as we do this time of the year, particularly higher priced listings, buyer activity has continued apace, quite strong. In fact, and that's acting with fewer properties available to push up clearance rates, can you believe? And we have some quite remarkable results over the last week in terms of auction clearance rates. So I don't want to give too much away. Let's get started. We saw a bounce upwards in home building approvals over May, which is the latest data, up by 4.2% over May, and that followed a 5.8% fall over April. So typically we go up and then we go down, and we go up and we go down. And the reason is particularly because the home building approvals are divided into houses and units. And units tend to be quite volatile because, Rachel, we can get a large development coming through in one particular month, and that will act to push up the total number of home building approvals, and then we don't get the same big number coming through the following month. So obviously we fall away. So unit data tends to be volatile. House data is more stable. So we did see a bounce back over May following April, up by 4.2% following that sharp April fall. Again, it was, as usual, units that pushed up the total, up by 11.3%. And houses, again, were flat, up by just 0.5%. And when we look at the trends, there are some concerns really over the nature of underlying construction of homes in Australia. We look like we were picking up for a while, particularly for houses. Then we've seen units picking up, but it's just starting to weaken a little bit, which isn't good news, in terms of trying to match supply and demand in this country, which clearly we have been unable to do for quite some time. Victoria was the top state for development, up by 14%, and a lot of that was as a result of a big surge in unit approvals. But overall, despite that lift over May, we're still our quarterly trends are still depressed, and the trend is now easing, which is a little bit of a worry. So this is the data up by 4.2% over the month. Units up 11.3%. Houses up 0.5%. Over the year to date, that is the year so far. That's the first 5 months of this year compared to the same period last year. We have seen a big surge in building approvals for units. There's no doubt that state governments are up and about in terms of expediting approvals for units for higher density development. So they're really pushing through planning approvals for units, higher density, and in the face of, as we've said, concerns about the level of supply. Houses not performing quite as well as units, up by 4.2% over the year so far compared to the same period last year, and similar results when we look at the year-on-year data. So yeah, look, units are doing okay compared to where they were a year ago. Houses still in the negatives, in the positive side, but we're seeing some signs that might be starting to weaken. So there's the trend, just starting to fall away, the national trend, even though we did see a surge in unit development over the month, or unit approvals over May. It did follow 2 weaker months, and it tended to push the trend down. But the numbers approved are, as we've seen, in total higher than where they were over the same month last year. When we look at the breakdowns, just a flattening out of house approvals nationally in terms of the trend. And this is the 3-month trend, tracking just a little bit higher than where it was a year ago, house building approvals. But unit building approvals, as we said, the trend is now falling away, which is a bit of a concern. So we look to what will happen in the next couple of months, but still tracking ahead of the same period last year. Now, I think this is interesting, Rachel. This shows us the breakdowns for the capital cities over the 5 months so far this year versus the same 5 months last year. Sydney, quite strong still, up 6% for houses, up 34% for units, 22% overall. So Sydney's, I guess, supply line for housing is still quite robust. And as you can see there, all capital cities are reporting very strong growth in units. As I said, state governments are up and about approving higher density developments and expediting planning approvals as part of that process. But it's interesting when we look at two of the markets there in terms of house approvals over the first 5 months compared to the same period last year. And Melbourne's down 7.7%, Rachael, over that period comparison. And Brisbane is flat. So Melbourne, which is typically the engine room of house development, just starting to fall away a little bit, which is a concern. And Brisbane, particularly given how strong demand is in that Brisbane market, prices still rising strongly there, has not improved at all in terms of approvals for houses. So that's sort of hitting the brakes a little bit, and that's what's creating that easing in the trend going forward. So still pretty positive news there for units, not so positive there for houses, particularly in Melbourne and Brisbane. And in terms of the big picture, Rachael, you know, it's good to see more approvals coming through for units, but we've got to remember it takes 2-3 years plus to turn a unit building approval into an actual unit that can be lived in. So even though they're positive numbers, they're not going to ease our shortage of housing anytime soon. It's houses that are more about the current time period in terms of easing shortages of supply. The big picture over the journey has been this falling away of building approvals. This is the long-term trend for capital cities. We can see we're still well below, nearly 30% below where we were back at the peak in 2015-16. Rising, but we can just see that trend tapering off a bit, which, as I said, is a bit of a worry. And when we look at the breakdowns between houses and units, you can see how units have really collapsed since that 2016 peak. That's the building approval for units, even though it certainly has risen strongly over the last year, which we've seen with that previous data. We're still down 50% on trend compared to where we were at the peak, and that's why we do have this terrible shortage of housing. Of housing, you know, that even though we've seen a little bit of improvement, we're nowhere near where we were. And the latest trends are starting to ease, Rachael. So, and particularly there for houses, as you can see, the capital city trend for houses is falling away. And of course, we saw, you know, two reasons there is the easing in Melbourne and Brisbane.
Yeah. Melbourne's still leading the nation in the total home approvals for units, though. So what factors are driving the growth for units, and what does it signal for first home buyers or investors in that state?
Well, look, more opportunities there, Rachael. There's no doubt that the Victorian government has become more proactive in terms of changing some of its planning laws for higher density development. We're probably not seeing that right now, but I think that there's a lot more positivity about building approvals for units in Melbourne. You know, but again, as I just said, that's not great in a sense of trying to provide more supply into the market, because it takes some time for those approvals to become actual completions. We're talking 2 to 3 years at the minimum, and there are still issues around about building costs as well. We're going to look at the latest building costs next week, but they're still high in relative sense, and that means it makes it even more difficult to turn that planning approval, to turn that building approval into an actual start, because, you've got to find the money to finance it per se in the face of higher building costs. So look, Melbourne, which is typically the engine room of development, particularly for houses, and we saw it just fallen away for houses, which is a bit of a concern, and it has improved along with the other capitals for units, but that's not going to improve the level of stock anytime soon. So I don't think there's any real implications here for buyers in the market, and other than the fact that it will continue, particularly in some areas, to be like other capitals, undersupplied for property going forward. And as we've seen, the Melbourne market is certainly reviving at the moment, and we'll check out those latest auction clearance rates just to see how Melbourne's going. But yeah, look, building approvals up, but it's more about that bouncing around of unit approvals that we see from month to month. But the trends don't look good, Rachael, going forward. Still. So we mentioned about retail sales. So retail sales picked up over May. That's the latest data that we have, up 0.2%. Still performing quite strongly, retail sales, up 3.3% over the year. Any annual growth over 3% is certainly positive, and it shows, and we shouldn't be surprised that people are quite confident about spending. It is a very strong economy in terms of the job market. We're going to look at the latest job figures next week as well, just to see how that's going. And that will be an important indicator for the Reserve Bank's next decision. But these numbers are still pretty good for retail sales. As I said, this is hard data. It's not sentiment data. So it actually is reflecting the level of sentiment. But unfortunately, the Reserve Bank is going to discontinue this particular series after June, which is a disappointment because it's been a really good and almost unique indicator, a hard measure of consumer sentiment. If the 2.2% rise over May followed a marginal fall over April of 0.1%, we're still seeing these robust annual growth levels despite lower migration and inflation, which naturally acts to increase the value of retail sales. We're well ahead of where we were in the post-COVID period, the pre-COVID period. And of course, lower interest rates will only act to fuel retail spending. And it does reflect positive consumer sentiment, inarguably, going forward. And when we look at the charts, Rachael, you can see there that there's just been a real consistency through that post-COVID period in terms of retail spending. And a lot of the commentators were saying, "Oh, yeah, it was going to run out of juice sooner rather than later because it was being supported by those stimulus packages." Well, it just has kept going on and on. And, we know the same because when we look at how robust the housing market is, why would we be surprised if people are spending on houses that they wouldn't be spending on other goods as well? And as I said, those annual growth rates have been consistently above 3% for most of the past year. And that does reflect a good number in terms of the historical pattern of retail spending. And as I said, we're a little disappointed that we're not going to have this series, except for the next month, to look at retail sales, which is another really good indication of how the economy is performing.
Yeah, well, as you mentioned, the lower rates are fueling spending and activity. Can we expect that to translate into more demand for newer housing and increased competition at auctions?
Well, these things work together, Rachael. Of course, if you have lower interest rates, you have more money in your pocket because you're spending less on your mortgage, typically. So you've got more disposable income, theoretically. And that's the whole purpose, generally, of lower interest rates, is to stimulate economic demand. That's why it's a little sort of a roundabout at the moment, because we really have strong demand as reflected in retail sales and the labour market. And yet we're cutting rates. But hey, who's complaining? More money in your pocket. So what do? You're not worried about your job, generally. And, you're looking around for houses all the time. And so, of course, lower rates, Rachael, will only mean more demand for everything, not just housing, which we're seeing quite clearly, but also is supporting retail sales. And this is the May data that we're looking at, Rachael, for retail sales. And that's when we had the interest rate cut. So this doesn't really, it doesn't really include the momentum and the energy from that May interest rate cut, so we've still got that to come. So, it's all blue sky in terms of consumerism, not just for the housing market and for retail too. So, as I said, it's just disappointing we're not going to be able to have this series to just give us a sense of what's happening on the ground with consumers.
That is disappointing that we're not going to have that anymore.
Well, it is, and a lot of this is because the ABS have to continue to watch their balance sheet, and these things can be expensive, and there's government decisions there about the funding of the ABS. But this is an important data set. We've had a similar issue. We used to report every month the home loan data, which was a great data set because it told us what not just what home lending was doing, which obviously reflects what the housing market's doing, but it gave us breakdowns for investors, owner-occupiers and first home buyers. So we could see what the parts of the market were doing. Now, we still get that, but we get that every quarter now, not every month. So it's a bit backward looking. We still will report that. But again, it's reflective of, belt tightening to some degree in the ABS. But I will miss the retail sales data because it does support, when we say there's a strong economy, we say, okay, yeah, there's a strong labour market. We can look at that every month, and then we can say, and there's also strong retail spending, but we're not going to be able to sort of support one with the other anymore. So let's have a look, talking about spending money, big money, well, maybe. Let's have a look at the latest weekly auction results. We know they're a great forward indicator, Rachael, of what's happening generally in the housing market. You want to get a look at those, get hold of those weekly auction results because they are a very reliable indicator of what's happening broadly in housing markets. And again, we've had more strong results despite this being a very quiet period. As I said, I think we've got every capital city or every state having school holidays at the moment, and a lot of those not just take school holidays as a holiday excuse, but they also just take holidays because this time of the year it is a bit wintry and a bit gloomy, so they head for warmer climates. But we're still seeing strong results there despite those holiday distractions. As usual, listing numbers are falling. We always see that this time of the year, but buyer activity remains very strong. And we had some remarkable results, particularly from that Sydney market, Rachael, last week. So let's have a look at the numbers. Check it out. We can start talking about, probably a bit premature, but we always say once you get to an 80% clearance rate, you can start talking about a booming housing market. Yep, that's the B word, boom.
That's the B word
Sydney,
again.
That's the B word. Can you believe it? In the middle of winter, Sydney auction numbers were down predictably around about 100 from the week before. We expect that. That's just the holiday result. But the auction clearance rate, which has been threatening to hit 80%, actually did hit 80% in Sydney. 80.1%, quite remarkable, up from the 77.7 recorded the previous week, and now clearly tracking ahead of where it was a year ago. So that Sydney market, Rachael, is certainly up and about, and we've known that really that it's been a very solid, consistent market this year. But if anything, now it's starting to accelerate. Melbourne listing numbers were down compared to the previous week. Again, about 100 fewer listings, and clearance rates were down. We just have a little bit of a note to Melbourne. The Melbourne market always tends to move away more than the other markets do during holiday periods. Rachael, I think Melburnians don't like to see their holidays interrupted by anything, even property. So we always start to see lower clearance rates during holiday periods in Melbourne, but still that 72.8% is a long way ahead of where it was over the same period last year at 67.4%, and still a result very much in favour of sellers. That's 72%. Brisbane, as we know, Brisbane's a bit of a here, there, every week auction proposition, around about 40 to 50% in Brisbane. So it's a bit more of a normal week for the Brisbane market in terms of clearance rates. It has a different auction culture to the other capital city markets. We know that Brisbane market is still red hot with prices rising. Its clearance rate was lower than the week before, but around about where it was a year ago. So the Adelaide market, another 80% clearance rate to match that one of Sydney's. Up and about the Adelaide market, it certainly eased over the end of last year and into this year, but now it's performing as strongly as it was a year ago. And 65.3% clearance rate, down on the week before, which was a very strong 74.5%, and now well ahead of the same time last year. So maybe we could start just about celebrating a revival in the Canberra market, Rachael.
Well, not to be undone by Adelaide, though, that showed impressive auction clearance rate of 81.1%
Yes.
and the high build approvals as well. What is in the water in Adelaide? What is fueling this strength, and how sustainable is it for the months ahead?
Well, I think we're seeing the impact of clearance rates, of interest rates, Rachael. I think that's impacting that Adelaide market now. We've certainly seen a rebound, as I said, compared to the weakening of the market at the end of last year, which I think was just a cyclical downturn. And lower interest rates, has brought the buyers back into the market. We're starting to see those 80% clearance rates now in Adelaide. It's interesting to see if it's sustained over the next few weeks. But look, that's a really good sign. And Adelaide was the strongest market of all the capital cities last year. Affordability issues and just the cycle running out of puff is why that market just eased towards the end of last year. But it's up and running again now because lower interest rates have improved affordability. So a very positive market environment for Adelaide going forward. And it'll be interesting to see if it does have a consistent run of 80% plus clearance rates over the next few weeks going forward. So if we look at the trends, that Sydney market, you can see how the Sydney market's really accelerating over the last couple of months and now moving into the stratospheric 80% clearance rate zone. So no doubt how the strengthening of that Sydney market, we expect prices to follow. And look at Melbourne, will you? That's really up and about over the last few months, really this year so far. So no doubt that Melbourne market is reviving and supported by the higher clearance rates that we've seen there, above 70%. Brisbane picking up a little bit, even though it was a weaker result last week. It's certainly tracking at higher levels over the last couple of months than it did at the beginning of the year and around about where it was a year ago. Adelaide, as we've discussed, it's now rising and looking a lot more like the Adelaide of last year. And as I said, Rachael, I think those lower interest rates are fueling or refueling the Adelaide market. And Canberra, gee whiz, yes, look at that trend, upwards and upwards since April. And I think we can now start to say that finally the Canberra market is in revival mode. But we've still got to be a little careful about saying that going forward. But it has been a quiet market for some time. And maybe it's following the lift in that Sydney market as it typically does, but didn't do last year. So if you're looking for the latest auction results, you can go to my LinkedIn channel, which is Doc Andrew Wilson at LinkedIn. Every Saturday night at 6 o'clock, you can get the Capital City Snapshot. And then the full national report is released Sundays around about 9 a.m. And that includes the regional breakdowns for Melbourne and Sydney and the top 10 sales under the hammer in each of the capital cities. If you've missed that weekly national auction report, there is a QR code which you can scan, and that will give you a PDF copy of the latest report, and you can check out all those insights on a regional level, particularly in Melbourne and Sydney. As usual, let's have a look at the great giveaway the podcast gives every week, and that's the My Housing Market Suburb Data app in conjunction with our good friends at Infinity. If you scan that code or click the link there, you'll get a copy. It'll take you to a copy of this great app, but you need to get a password from Infinity. We promote this and present this great app in conjunction with the folks at Infinity. Here's a screenshot of what you get with the app. This is all about current asking prices in the market, and it's current time, real time asking prices, so you can and rents, so you understand what vendors and owners are pitching and real estate agents are pitching for properties currently. You can filter it for price or rent. You can filter it for the capital city region of each state or the outside capital city region of that state. We're looking here at Blacktown in Sydney's capital city region. You can filter for house unit or townhouse. We're filtering for house. You can also filter for the number of bedrooms. So we're looking at a 4-bedroom house in Blacktown. Not only does it give you the current median asking price, so you understand what prices are being pitched for in that market, it also gives you the low and the high, so you know the boundaries in terms of what properties are being marketed at the moment and the number of properties for sale. Exactly the same thing for the rental market, and we've done that again for a 4-bedroom house in Blacktown. Medium rent of $750, low of $570, a high of $850, and 20 homes currently for sale. And if you're an investor and you're looking for what the current yields are, that is the return on investment with the current asking rent versus the current asking price over the past year. There are the top 10 yields as a result of that measure of that return on investment. And it's not only the top 10 yields, but also the vacancy rate, the number of properties for rent, and the number of properties for sale. And if you don't know where these suburbs are, just click on the link on their name, and that will take you and show you a map of where the suburbs are. So a great little tool for those that are wanting to take a bit more of a scientific approach to determining what's happening with property going forward. So next week, Rachael, as we mentioned, we're going to have the June labour market data, as well as the May house building costs, and as usual, the latest weekly auction results. So if you've missed this week's report, you can get a copy of it there with that QR code. So even though I had to push the cough button a couple of times, Rachael, I have managed to survive. So apologies for that one. But it is the middle of winter, Rachael. There's a fair bit of sniffling and coughing going on around the place. So you make sure you keep out of all those bugs' way, all right? And stay nice and healthy. Stay healthy in that Queensland sun.
Well, I'm gonna stretch the voice a little bit further, if you don't mind. I've got one more question for you.
Yeah, sure.
Awesome data this week. Just as an overview, what are the most promising signs that you're seeing in this data for our property investors and home seekers?
I think it's the consistency, Rachael. You know, we're really seeing a lengthy period of consistency, strength of the economy, rising prices, and rising affordability through lower interest rates. There's really nothing you can point to that would suggest any sort of negative, negativity about our property markets. Auction markets are performing well, and the markets that have been underperforming are now starting to pick up again. Adelaide's picking up, Melbourne has picked up. We've seen Perth, which was a boom market last year and did fall away quite sharply at the end of the year and the beginning of this year. Now it's picking up as well. So it's that consistency going forward. We really can't point to anything that would be a bit of a grey cloud, in terms of the outlook for property. And I'm pretty confident, even though I was one of the few that suggested the Reserve Bank wouldn't cut rates or shouldn't cut rates last month, I think that they're pretty well set to cut rates at their next meeting once they get the June inflation data. So that's just going to only add to what I've said is the positive consistency about all the factors that we have in our property market. And really, I think if you look back in time, you really struggle to find a period where we've had so much positive consistency or consistent positivity in our markets as we've got at the moment. I mean, tell me, where's the negativity? The only issues that we've had have been the debate over the US tariff policy. And that's sort of just become a little bit ho-hum all of a sudden, And as we've seen, that affected the stock market. It just didn't, the property market just didn't miss a beat, which again reflects just, the lack of, thankfully, of volatility property markets have compared to other asset classes, particularly shares, So as I said, it's all very positive, Rachael, and it's been consistently positive for quite some time now. The doomsayers are really having a bad time at the moment. You wouldn't be a doomsayer for quids, would you, Rachael, at the moment? No, but I'm sure they'll come up with some sort of spin anyway, because that's what they do. They spin.
Yeah. No, exactly. Awesome. Thank you so much. Well, there you have it. Opportunity doesn't just knock. It sometimes hammers loudly with a clearance rate attached. Big thanks to Dr. Andrew Wilson for translating the stats into stories and for reminding us that markets move, but a smart strategy always has its place. Until next week.
Thanks, Rachael.